Good morning, everyone. Today is February 29th, 2024, Thursday, and it's 8:50 in the morning. Let's analyze the market together. First, let's take a look at the cotton market. Looking at the international market, there was a significant downward movement in U.S. cotton yesterday evening, although it wasn't as pronounced as in the domestic market. As for the domestic cotton futures contract, 2405, there was also a considerable downward movement, breaking the previous high, but then falling back below it. I believe the pivotal point for contract 2405 is around 16,000 points. During the price decline, it may be wise to reduce positions but not necessarily exit completely. If it falls below 16,000 points, then it might be appropriate to consider exiting completely. Some traders may have already exited their positions. For those who have, it's best to adopt a wait-and-see approach and observe how the market adjusts, especially considering the significant downward movement yesterday. Now, regarding soybean oil contract 2405, it's currently trading below the 60-day moving average, indicating a bearish sentiment. As for oilseeds, I haven't taken any long or short positions recently and have been observing the market. The reason for not taking positions is a lack of confidence in my trading abilities. Therefore, I'm more interested in observing any rebounds in soybean oil. Let's see how it consolidates at this level. Remember, these are just personal observations and should not be the sole basis for your trading decisions. Let's continue to monitor the market closely and adapt our strategies accordingly. If you have any questions or insights, feel free to share them with the group. For rapeseed oil contract 2405, I'm also keeping an eye on its consolidation pattern. As for palm oil contract 2405, since it's trading above the 60-day moving average, I'll be focusing on potential opportunities for strong bullish trends rather than short positions. So even though both are oilseeds, the sentiment for each contract can be quite different. Some may lean bullish, while others may lean bearish. Now let's talk about soybean oil contract 2405. The overall trend for this contract is bearish. However, looking at its recent consolidation pattern, we can see several highs connected by a line, forming either an ascending triangle or a symmetrical triangle pattern. Regardless of how we interpret it, whether it's an ascending or symmetrical triangle, according to technical analysis principles we've learned, after a downtrend, the probability of maintaining the original direction in any consolidation pattern is relatively high. So the likelihood of further downside movement remains significant. However, what we need to pay attention to is whether there's any potential bottoming formation at this level after the prolonged downtrend. If there's a possibility of bottoming formation, then the overall pattern may indicate a breakout to the upside. For example, breaking above previous highs or surpassing the 40-day moving average could signal a shift in momentum. So it's essential to monitor these factors closely. For the sugar contract 2405, I perceive it to be predominantly bearish in nature. Consequently, I haven't been actively trading it recently. Instead, my focus has primarily been on cotton contract 2405, as I've mentioned before. I've been preparing to exit all positions once it reaches the 16,000 mark. My positions were taken at 15,500, and I plan to exit them as it approaches 16,000. However, in terms of profitability, this contract hasn't yielded much. As for corn, it's considered bullish, but I haven't taken any long positions in it. Despite its bullish outlook, I haven't initiated any trades. Regarding PVC contract 2405, I've been recommending it to everyone lately. The main reason behind this recommendation is the upward trend line, the 60-day moving average, and the consolidation at the lower levels after the previous decline. I've been closely monitoring these factors. While my interest in PVC isn't particularly strong, those who are interested might want to pay attention to the 5,931 level for potential long positions. PVC, being a chemical product, is closely related to rubber and plastics. Therefore, keeping an eye on this level might offer trading opportunities. As for domestic contracts, I recall some traders showing interest in peanuts. The contract seems to have broken above the 60-day moving average, indicating relative strength. However, initiating trades at the moment might not be the best strategy. Regarding PVC, I've been monitoring it for quite some time, possibly since after the Chinese New Year. I personally feel that above the 60-day moving average and above 5,900, it could be a good opportunity for long positions. However, it's essential to exercise caution and set up defensive measures, such as setting stop losses around 5,900 to manage risk effectively. As always, trade sizes should be adjusted according to individual risk tolerance and capital size. All right, let's wait for the market to open and observe the price action closely. After the opening, we need to pay attention to various factors such as intraday strength or weakness, whether it's a high open high rise or a high open low decline. These are all crucial factors to consider because trading commodities futures can be challenging. Today, let's focus on corn futures. We'll keep an eye on whether cotton futures contract 2405 has the potential to return to around 16,000 points. As for PVC, it opened around 5,900 points today, which is decent but not exceptionally high. We'll monitor how it consolidates around this level. Personally, I feel inclined towards a bullish sentiment as long as it remains above 5,900 points, but it's important to trade cautiously and look for signs of strong momentum. Regarding cotton futures, due to the significant pullback yesterday, it's advisable to pay attention to the support level around 16,000 points. We'll also closely monitor the 3-minute candlestick chart for intraday patterns. Moving forward, our main focus will be on cotton futures contract 2409, as it will become the primary contract due to rollover. For PVC, there's potential for trading opportunities, especially considering the upward movement in international cotton futures. However, domestic cotton futures didn't follow suit significantly. When the international cotton futures fell last night, the domestic market responded swiftly, indicating a lack of strong correlation. Let's keep a close watch on the market dynamics and adjust our strategies accordingly.